Hi friends, this is Jairam Sridharan, Managing Director and CEO of Piramal Finance, and you're with me again to watch our annual episode of the Indian Central Government Budget. It has become a little bit of a tradition and we've been doing this for the last 3-4 years. I must say, the first thing I think today as I do this kind of, third or fourth edition of this, is I wonder how Ms. Sitharaman does it. She's been doing it for 9 years, for Lord's sake. It's tough as hell to just talk about what she said yesterday. So imagine kind of doing the whole thing herself. So hats off to her. When we were growing up, the budget used to be this really big thing. Everybody looked forward to it. The media sort of built up to it for many weeks. And then the big event happened, the big day happened. There were always some big dramatic things that used to happen in the budget. And then there were these big thumbs up and thumbs down and who gave 7 stars and who gave 3 stars and all this conversation the next day. And kind of this breathless coverage for many, many days to come about what the budget is telling us about our country and about our economy and basically is the government on the right track or the wrong track and so on. Over the last few years, all that drama and all that breathlessness has slowly faded away to a point where the budget is no longer as much of a high drama event as it used to be. It's quite a straightforward thing. Some of the biggest announcements regarding the country's economy actually end up happening outside the budget. They don't wait for the budget. Like, for example, if you see the last year, the biggest economic announcement, which would historically have always been done in the budget, was GST. You see what happened in October? A massive GST cut happened. The entire economy rallied. Lots of things happened around that. But that happened outside the budget. If it had happened yesterday along with the budget, the narrative that you're hearing today would have been completely different, right? That shows you how a lot of the high drama events, the government in recent years has taken them out of the budget. And it's like watching a Saas Bahu serial where all the dang scenes have been cut out and you're only seeing people walking from one room to the other. So it's essentially become less and less of an event for the Aam Aadmi. I feel that more and more the budget has become an event for the economists, the policy wonks and nerds. Who want to really get into the numbers, really understand how the accounts have moved and whether the government was right or not right in their estimate last year and by what percent and all this type of stuff. So increasingly, even on the TV talking heads, you see more and more economists discussing the budget and less of the Aam Aadmi or kind of the politician, etc., talking about the budget because nobody knows what to say. Like there is nothing to say. So that's kind of the big backdrop, which has been going on for the last multiple years around the budget, which is that that it is much more what it should be in reality, which is a taking of account of how much revenue am I making, how much spends did I do as a government over the last year, what am I intending to do in the next year, etc. And once a year, and I've always encouraged you all, our audience, to do the same, which is once a year, go back and look at how much money you made last year. Where did you spend the thing? And net, what did it mean for you? What happened to your borrowings? Did you increase your borrowings? Did you decrease your borrowings? What happened to your net worth? Can I take a look at that at least once a year? It's always good for you. That's what the budget should be, and that's what it is increasingly becoming. Of course, the media doesn't get it still, I don't think. The media still wants to make it into this big dramatic affair, but the lack of storylines in the budget sometimes hurts them. So, long preamble there. Let's jump in. Let's talk a little bit about the budget that was presented yesterday on a Sunday, which was kind of weird. So that pretty much ruined my Sunday. So thanks for nothing there. So let's look at what the numbers said. And I want to start with the numbers because that's exactly what the budget is: a tally of the government spends and how much the government makes. Okay, let's start with the government's revenue. How much revenue did the government make in this year, financial year 26, that will end in March? What do they expect to make, and what do they expect to make next year? This year, the government expects to make about 38 lakh crores. right? 1 lakh crores or 1 trillion. It's a very, very large number. So 38 lakh crores is what the government made in 26, and they expect to make 41 lakh crores in the coming year. So up by about 6%. So it's like the government got a 6% increment. So when you guys get your increments later this year, you can benchmark that with the government. The government got 6%. Okay, Piramal finance people, don't hear this part of the conversation. All right. So the 41 lakh crore of total revenue, where does the revenue come from? Predominantly, the government, all governments get their revenue from taxes. So our government got a total of about 44 lakh crores in taxes. Wait a minute. You might be thinking, hey, total revenue is 41 crores, tax is 44 crores. What the hell? How does this math? But don't worry, the math does math, because of the 44 lakh crores, the government gives 15 lakh crores to the states. So the central government ends up getting only 29 lakh crores, not only, but 29 lakh crores. So 35% of the tax revenue actually goes to the states. So the central government ends up keeping 29 lakh crores. That's the biggest source of revenue. Within that, the big two sources are GST and corporate taxes. GST, corporate taxes, and income taxes. Let's say they are about the same number. So that's those are the three big ones. They all are about 12, 13 lakh crores-ish kind of range. And then there's a bunch of other revenue that the government makes in terms of dividend, interest income, etc. So net, the government makes about 41, expects to make about 41 lakh crores next year. Oh, by the way, railways, in the past, you might recall, the railways used to be its own budget. Because there was so much revenue and so much expenses associated with railways that it was thought appropriate to actually make its own budget. In the last few years, that has not been the case. It has been clubbed in to the rest of the budget. The railways income, that is the money that the government gets from railways, all the ticketing stuff, all the freight stuff, etc., that totals about 3 lakh crores. Right? So that 3 lakh crores used to be its own budget in the past. But now it is not. It's all part of the 50 odd lakh crores total budget that I will talk about in a minute. So the government makes, the central government is expected to make a total revenue of 41 lakh crores. Let's stay there. Now let's think about spending. How much is the government expected to spend and on what? Headline, the government expects to spend 53 lakh crores in 2027. They're supposed to make 41 lakh crores or expect to make 41 lakh crores. They expect to spend 53 lakh crores. Expenditures are up by 8%. Remember I said income was up by 6%. Expenditures are up by 8%. So a little bit higher on the expenses side. Now, where does the government spend? We had this little pop quiz last time. I'll ask you the same question. Think about it hard. What is the government's number one expense item? Is interest payments. The government has borrowed so much money over the years, they need to pay interest on that. That tends to be the number one expense item. It's like saying that all of you, your number one expense might be your EMI that you're paying, right? If you borrowed to buy a house or a car or whatever it is, that might be your number one expense item. That is exactly the case with the government as well. Interest on all their outstanding debt is their number one expense, and the government expects to spend about 15 lakh crores on interest. That's kind of like saying about 1/3 of your salary goes towards EMI or EMI plus a rent or whatever it is, some version of that, right? So that's kind of the state with the government as well. About 15 lakh crores they spend on interest. Then they give money, some grants to some states, etc. Then you have defense, on which the government spends about 4 lakh crores. Railways, remember 3 lakh crores of income, about 3 lakh crores of revenue. So, 3 lakh crores of revenue was the case, and now they spend about 3 lakh crores as well. So, net, it's kind of a break-even kind of a budget for if you just look at railways. There are one or two interesting things. Every year I find some interesting little nugget of such a large base of 53 odd lakh crores. How much I wonder is X. So, I found one interesting nugget this time. You know how much the government spends on tax collection? That's kind of a weird thing, right? Just to collect taxes from all of us and all the companies. The government in this year, financial year 26, spent almost 55,000 crores just to collect taxes. It's not the amount of taxes collected, it's the amount they spend to collect taxes. That's kind of a crazy big number. Like, I don't know what all goes in there. I'm sure there's some really koofier technicalities which I don't understand. But it seems like a really big number. In good news there, the government expects to cut that down pretty drastically next year. They have cut that budget down from 55,000 crores to about 41,000 crores. So I don't know, if you're a tax collector, your budget has been cut, I guess. I don't know what that means. But 40,000 crores. So that's kind of an interesting thing. Compared to that 56,000 crores spent on collecting taxes, I found it interesting that this total spend of the government on medical and public health, the total spends on that was about 45,000 crores. So there is less money the country spends on providing health services and hospitals, etc., to the entire nation than we do in tax collection. That seems kind of bizarre. That struck me. I don't know. Maybe there is something there. I'm not an economist, but maybe there's some really good reason for this. I don't get it. Since it's kind of January, February in Mumbai and pollution outside is terrible, I also went out to look at what is the total budget of the Department of Environment, just to see like whether they have the money to clean our air or what's happening. Turns out the total budget for next year is about 3,500 crores for the environment. It's not trivial, but seems in the larger scheme of things really, really small. So there's some interesting little nuggets there about where and how the government ends up spending its money. Okay, so the government is expecting to make some 41 lakh crores. They expect to spend about 53 lakh crores. There is a 12 crore delta. Where does that 12 lakh crore come from? Borrowing. So the government is going to borrow on a net basis about 12 lakh crores. But if you listen to Ms. Sridharan yesterday, she said that government's total gross borrowings were about 17 lakh crores. That's a bit weird. They're borrowing 17 lakh crores, but they need only 12 lakh crores. Why are they borrowing 17 then? Well, they're borrowing 17 because they're going to use 5 lakh crores to repay some old debt. What has happened is, in the last year or so, interest rates have come down in India a little bit. So what government wants to do is to borrow money at this lower interest rate and repay some of the debt that they have borrowed at higher interest rates in the past. It's like you going with your home loan to some new borrower and essentially saying, hey, kind of, give me a loan at a lower rate now. I'll repay that old guy and you can have my home loan, right? That balance transfer. That's the kind of situation that the government is trying to do, is to repay 5 lakh crores worth of old higher cost loans by replacing them with lower cost loans, which of course 100% makes sense for the government to do because rates have fallen. And remember, what is the number one thing that the government spends their money on? It's interest. So they're going to try to find ways to reduce that amount, right? To reduce the amount of interest they have to pay. So any chance they get of actually borrowing lower and repaying, they will take it up, and that's exactly what they're doing. That's exactly what you should be doing as well as individuals. Now, let's try and put some of these numbers in perspective. India's GDP is right now about, expected next year to be about 400 lakh crores, right? It's expected to grow by about 10%, right? So this year we expect to end at about 360 lakh crores. So next year we'll end at about 400 lakh crores. 400 lakh crores is next year, which is about, let's say, $4.4 trillion. That's India's GDP expected next year. So the central government, what we have been discussing so far, 53 lakh crores of spend, central government spends is roughly 13% of GDP, right? 50 odd lakh crores on 400, about 13% of GDP. If you add states to it, it becomes about 27% of GDP. How does this compare with other countries? Well, China is at about 35%. Government spends to GDP. Developed markets are between 40 to 50% of GDP. So essentially, in some of these other markets, the government is a much bigger part of the economy than it is in India. Might seem to you slightly counterintuitive. You might feel like, oh, in India, government is everywhere, and government is such a big part of life, and private sector is not that big. Turns out, not quite. If you purely look at the total expenditures or size of government expenditure, India is actually smaller. Indian government is actually smaller than many of these other countries. And why is the government not spending more? Well, the government is not spending more because the government's tax revenue is low. Because the government can only spend what they have, largely, right? And that's tax revenue. Tax revenue in India or central tax revenue is about 12%, about 20% if you include all the state taxes, etc., of GDP, right? So that's what our tax revenue is. In the developed markets, in the OECD countries, that number is about 35%. So OECD countries get a lot more income, or the governments make a lot more income from their populace in the form of taxation. And India is much lower than that, and hence the Indian government is a much smaller part of the overall economy because they just don't have that much money to spend. Say, oh yeah, here's an interesting point. I said that the government is planning on borrowing about 12 lakh crores on a net basis, borrowing about 12 lakh crores. The total revenue is about 40 lakh crores, right? 41 lakh crores. Revenue is about 41 lakh crores. That's about 30%. So let's try and put that in perspective. Let's say your average salary is, I don't know, 10 lakhs per annum. Let's assume the median number for LinkedIn or whatever, many of these social media places is probably about that. So let's call it 10 lakh crores. 10 lakh, not 10 lakh crores, for Lord's sake. 10 lakhs is, let's say, your salary in a month. Then it means that you're taking an additional loan of about 3 lakh rupees. That's the way to kind of think about it. That's the size of kind of incremental loan that the borrowing that the government is doing. And you're currently paying, if you were like the government, you would currently be paying about 4 lakh rupees a year, or about 30,000 a month in the form of interest. So your EMIs or kind of your interest payments, etc., are about 4 lakh rupees a month, and you're taking an 4 lakh rupees in the year, and you're borrowing incrementally another 3 lakh rupees for yourself. That's the size of borrowing you're talking about. So it's not terrible. It's not a lot of loan that you'd be taking if you were to take a 3 lakh rupee loan and you were a 10 lakh rupee salary guy. But it's not nothing. It's not nothing. If every year you're taking that incremental loan, then your loans are slowly building up, and you do want to keep repaying them and keep it under control, right? Which gets us to the fiscal deficit, right? Which is, what is the fiscal deficit? What I make minus what I spend minus what I make. What is it as a percentage of GDP? The fiscal deficit this year is going to end at 4.4%. Financial year 26 is going to end at 4.4%. This had gone completely out of whack in the COVID years. In the COVID years, the government had run up a fiscal deficit all the way up to 9% of GDP. Right? So 9% of GDP was our deficit. That has slowly come down, and now it is 4.4%. Next year, it's again expected to come down, but not by that much, 4.3%. That 4.4 is expected to go down to 4.3%. So a small amount of further consolidation on the debt, but not huge. What did not happen in the budget? The budget did not speak about direct taxes much at all. Nothing was there on income taxes. No slabs got changed. No rates got changed. Nothing really happened, right? So that was that was an important kind of dog that didn't bark in the budget yesterday, right? But there was one thing that happened which has been kind of all over, particularly the equity markets, which is this STT, right? Securities transaction tax. For 95% of the people who are listening in on this, it probably means nothing, right? It's a very, very small thing. But for the equity markets, it has meant a lot. So you saw the markets fall 2% yesterday, and so on. And let me take a moment to actually talk about that. That's for futures and options, to discourage a lot of retail investors from speculating in F&O. The government had earlier introduced a transaction tax and on those instruments, and they have gone ahead and increased that transaction tax this time. That has gone down pretty poorly from an equity markets perspective, particularly for foreign investors who are looking for a lot of liquidity in the Indian markets. This is an important source of liquidity, so they feel that, hey, discouraging F&O is not the way to go, and hence you have seen some pressure on the equity markets today. My view on this is that yes, for equity participants, particularly foreign participants in the equity markets, this is a bit of a negative, but for the country, it's a positive. I think it is something that needs to be done. I see way too many young people focus too much on options and futures, not knowing enough about these instruments at all, not understanding the levels of risk that they're taking, and being irrationally confident about their ability to make money in F&O, and almost all of them lose money. And this is a stage in our life where young people should be discouraged from doing all this speculative stuff, and encouraged towards doing more productive activities. So in my books, it's a perfectly fine move. And yes, it hurts the equity markets in the short run, but that's okay. These are lumps we need to take. These are some small sacrifices we need to make towards building a long-term healthy youth in our country. In this case, I mean financially healthy youth, and speculation is never a good idea for them. You also see the debt markets kind of worsen a little bit in light of the budget. The government 10-year yields are up by about 7 basis points, and higher yields is a bad thing, because that means prices fall. So yields go up. So higher yield by 7 basis points on government securities has been the response of the debt market. So both debt and equity markets have been down on this. So I spoke about equity. The reason debt markets are down is that borrowing number. Remember, I said the government is expected to borrow on a gross basis 17 lakh crores and on a net basis about 12 lakh crores. That 17 is a bit higher than what people were expecting. Everybody, and I had spoken out as well yesterday before the budget that I expect between 15.5 to 16 lakh crores. Actual number was 17. It's okay. It's not that bad. And on a net basis, all of us were expecting 12. So on a net basis, even though the 16 has gone up to 17, but the net basis 12 is still the same. So hopefully it will kind of fix itself, and I'm sure RBI is watching it closely, and we have a policy meeting of RBI coming up on the 6th, which I'm sure will take some steps to try and fix this as well. So that is my summary of the accounts of the central government of India that were presented yesterday in the form of the budget. The big summary is kind of very stable on long-term growth of the story of India, very disciplined from a financial perspective, no shenanigans, no big dramatic moves of any kind, and very disciplined in terms of the path of continuing to consolidate debt and pushing towards a country which is a lot more self-reliant in the face of a lot of the tariff war and other big macroeconomic activities that you see there. So a lot of focus on industry sectors that will grow from an export standpoint and which are not very import intensive. So a lot of focus there, a lot of focus on steady health metrics, but nothing dramatic for the immediate term, which is, as I said before, exactly what a budget should be. I hope you enjoyed listening to this. Maybe again next year, we will see.